everybody. Welcome to TraderMerlin Show. It is a very special show today. I know I've got a ton of questions that have come in about all sorts of market things. I may get some of that market information near the end, but for my friend in the audience here, Mr. Tom Barr, we're going to talk about the San Francisco 49ers today. Yes, you see that flashing on the screen? That's just for you, Tom. No, we're going to talk about a different type of miners and gold mining. Maybe it's the new digital gold out there. Today's topic is going to be about mining cryptocurrencies, what you need to know. And I think that there's a ton of misinformation out there. And I think before you jump into anything, you should know what the basics of it is, why it's there, what it exists, or why it exists, and really how you can position yourself best to capitalize on that market. Now, I know a little bit about it, but fortunately for me, Tom knows my guest today, Mr. Ryan Hall, who's joining me from the sweltering sweltering California Inland Empire. We've got Mr. Ryan Hall joining us today. Ryan, how are you doing?
Hey, Merlin. Thanks so much for having me on. And yes, it is pretty warm out here.
I love having you on. Thank you for adding some diversity to our show and actually bringing on a very important topic. I'm very glad that I was introduced to you because you and I had a couple conversations, and I would venture to say that we're both crypto fanatics and geeks at heart. So, should be an entertaining show.
Absolutely, yeah.
Let's start with this, a little bit of a trader profile, if you will. Tell me a little bit about how you got into the crypto space and a little bit more about your background so we can kind of set the stage for the crypto mining.
Yeah, so I had graduated from college with a mechanical engineering degree in spring of 2016. And then a buddy from school introduced me to Bitcoin in January 2017. Pretty decent timing. It's all relative, some of us in earlier, some of us in later, but yeah, so at the time I was actually listening to your old show through OTA and getting into markets and trading and figuring out finance, trying to, and so started to got bit by the bug as far as learning more about Bitcoin and crypto, and started to invest in it and trade it, and then started to learn more about, okay, how's this work? What is it operating on? What's this mining thing? And at the time, as I was getting, my portfolio was becoming more heavily weighted in crypto, and hearing, oh, this is a high risk thing, you should have a small percentage in. But I wanted to invest more. I saw mining as kind of a hedge against risk, because back then it was really unclear as far as, okay, is Bitcoin going to be around? Is Ethereum the next big thing? Is Litecoin, Dash, Monero? And so I thought, okay, well, I want to put more in. How about any more investment is just into the mining hardware, which is a little bit versatile in that depending on which machine it is, if it's a GPU rig or ASIC rig, you can you're not stuck with just one investment, so you can mine different cryptocurrencies with that mining infrastructure, if that makes sense.
Yeah, and so you started off building or doing it yourself, and we can talk about, we'll in a bit we'll get to the mechanics of it, kind of what all the detailed components are, but you started doing this on your own, and obviously there's a pretty big learning curve to it. Let's take a step back before we dive into the mining, and from your perspective, what service and benefit and purpose do miners provide to the ecosystem of cryptocurrencies?
Okay, yeah, good question. Because if you're brand new to hearing about digital assets and cryptocurrency, it really sounds kind of like a gimmick or a game of like, okay, what's this mining thing? And so it really the energy expenditure, which is significant. So mining requires a large amount of electrical consumption that isn't trivial or insignificant. So there's a number of different ways it can be explained or understood, but in one way to look at it is that the investment in the mining, the energy consumption, ties the digital asset to a real world value or asset, such as the kilowatt hour or a unit of energy. So that's kind of a high level look at, okay, well, does it matter that there's energy expenditure? But as far as what's going on is there's machines, computers that come in different forms, whether it's a GPU based machine, which is graphics processing unit, or ASIC based machine, application specific integrated circuit. These machines are running a code for the specific cryptocurrency, and they are cryptographically verifying transactions. So if I send, one Bitcoin to an address somewhere else in the world, let's say, China, to ensure that transaction there's no double spend, to ensure that the recipient receives the cryptocurrency, the kind of intermediaries would be the miners, and they are helping to secure these transactions, in addition to unlocking the new supply of the cryptocurrency. So, rather than just, Satoshi Nakamoto writes the code for Bitcoin and then says, here's the code, start, there's 21 million out there. It starts with 0. And then over time, the supply is unlocked one block at a time. And that's where the mining thing comes from. Just like the supply of gold is slowly unlocked or pulled from underneath the surface of the earth. Same with these digital assets, as generally they start with a supply of 0, and then through the mining process, their supply is released.
It's an interesting point that you bring up there. There's a couple things I want to reinforce, but number one, the last part you were talking about, the comparison to gold, which I think is a good one. To make it simple, just think of it as this is the mint, right? So the miners are the ones who are minting new coins. And what makes, in my opinion, cryptocurrency brilliant from a math perspective or an engineering perspective is the design of it. Because with gold, we know that it's getting more and more difficult to extract gold out of the ground. So it's an inconsistent extraction rate, right? We don't know all the different variables. Are they going to hit a new vein? Do they get new equipment? With cryptos, it is a predetermined set, an emission curve, if you will, where over time, it does get harder to mine them. The rewards get fewer, but in theory, the value of that cryptocurrency will be higher down the line. So miners provide this service of validating transactions, but really making sure that if you send cryptocurrency from your address to somewhere else, they're solving a puzzle. And the puzzle that they're solving basically seals a block of data that's validated by all these network nodes. So it's this one big collaborative effort. And the piece that you mentioned, which nobody talks about, and I love that, they say that Bitcoin has no intrinsic value. It's just worthless digital ether. That's not true. Anybody who makes that argument does not understand it, because what the intrinsic value is all the electricity is actually giving a value to each Bitcoin that's being mined and minted and being brought to life. So there is a tangible value there, and that's the energy cost that goes with it.
Oh. Right. And also, Merlin, I like your explanation there. I think that was a much clearer one than mine, but I like the way you put that together. That's exactly right.
Yeah, it's fascinating the more that you dig into it. I know you and I could go on and on about the systems, etc., but I want to kind of keep going here. Otherwise, we could probably do a 3-hour show.
Yeah.
So
yeah, right.
So let's take a step back a bit. The average person is hearing about Bitcoin. I mean, we breached 60,000 today. I'm loving it. My portfolio is at the highest value it's ever been. Thank goodness for all the crypto. Thank you, Elon Musk, by the way. Shout out to Elon for the constant pumping that he's doing. Love it. But there's a misconception, I believe, that you can just simply get a mining rig, turn it on, and boom, it is free money. Now, we'll argue that here going forward, but talk to me about the pieces that you need to get started. What if I want to just come in cold turkey and say, I'm setting up a mining rig in my living room, what do I need to look at? What do I need to buy?
Right. Okay. Yeah. And so that's something else that even though I've been running miners for 5 years now, and I've really enjoyed doing it, and in many ways have made good return on my investment from it. For the most part, it generally makes more sense to just put your capital into the Bitcoin or cryptocurrency itself and not dump money and time into the mining process unless you're going to do it on a really big scale, because ultimately it's a very competitive game where you're trying to have the lowest marginal cost of electricity and marginal cost of operation. And you are essentially in competition with everyone else in the world. Mm-hmm. That being said, it can be a very interesting or fun hobby, or if you have excess energy from something like solar or hydro. Most commonly, on a residential level, a lot of people will have solar power, and if they're off grid and they can't monetize, and sorry, I'm probably going a little bit off course here from your question, but
it's okay.
If they can't monetize that energy by partnering with the utility, then mining can be a great solution to monetize that energy.
But saying, having said that, we could make the argument that probably your number one cost is going to be energy.
Correct. Yep. Initial capital expenditure would be the machines themselves, and then some peripheral costs in terms of the IT equipment. So the inputs are just data through an Ethernet connection and power at 120 volt or 240 volt AC. So your main running expenditure is going to be electricity. And in California, we have, just like pretty much everything else as far as expenses go, we have the highest electricity cost, I think, on average in the country. So that is something you want to look at. And in general, you don't want to invest a ton into mining unless you have access to very affordable electricity. But if you want to do it on a small scale or offset by solar, then it can be a great investment and a great kind of hobby as well.
Yeah, I think the challenge here is obviously electricity costs vary dramatically. And when I was looking at this, and I won't walk through the whole analysis that I did, but I really was just looking all around the U.S. and down here in Orange County, I was looking at about 16 to 20 cents per kilowatt hour electricity. And I say that by itself, nobody knows if that's high or low, but when you start to put it into some of the calculators, and we'll show you some here in a second, where you can actually say, you look at your electricity bill, you see what you're being charged at different tiers, because obviously if you're going to be running a big mining rig or multiple, you're going to be in the highest tier, right? You're going to be obviously using as a significant amount of power.
Right.
There were some places in the United States that were getting 7 cents a kilowatt hour. I'm paying 16 at the low end. I cannot compete with them, and the numbers didn't make sense for me. And I love what you just said to start the thing off. You said for most people, it's probably better just to buy the crypto than actually do the mining. And I found that for me personally here in Southern California was the case.
Yeah, exactly. And it's a really hard figure to estimate what the global average electrical cost or price is, because there's no, that's just not data that's aggregated by pools or anything.
Right.
But the estimates are the global average for mining operations is under 5 cents a kilowatt hour, if not closer to 3 cents a kilowatt hour. So generally on a residential rate, you're going to be paying a lot more. That being said, I'm looking at a profitability calculator right here, and an Antminer S9, which is one of the kind of older now. I think it was released in 2017, or actually maybe 2018. One of the older SHA-256 Bitcoin miners is profitable at up to 16 cents a kilowatt hour. So that means you'd be breaking even on your rate, which means you would basically be just buying Bitcoin through your electric bill.
But I would look so cool doing it, man.
You would look cool doing it. And if it's winter, maybe you're heating a room, which isn't that necessary in Southern California, but other places of the world, certainly.
So let me, and I love that you went down the route. I was actually trying to do the same thing, but here, I'll show the viewers, there's a page you can look at. This is called what2mine.com, and what Ryan was just talking about. There's a bunch of different tabs across the top, and we'll explain the difference here between an ASIC miner and a GPU. I'll let you explain the difference here between ASICs and GPU.
Okay, yeah. So ASIC acronym, that stands for Application Specific Integrated Circuit or Chip. I've heard both, but meaning it is purpose-built to do one thing and one thing only, and that's run this algorithm. And there's a handful of, like I'm looking at what to mine right now, and there's at least about a dozen crypto algorithms that are worth something. And so each ASIC will run at least one algorithm. Some of them will run multiple, but you are fairly limited in which cryptocurrency you can mine with an ASIC. So you're going to be able to mine between 1 and maybe up to 5 different cryptocurrencies with one ASIC.
But they're fairly tailored based off the algorithm behind it.
Right. So You mean as far as the ASIC miner?
Right. So guys, you see on the screen here, like there's one that says here, you see where my cursor is, it says SHA-256. SHA-256 is kind of the algorithm behind Bitcoin and many other Bitcoin derivatives. But you also have, you see Script, you see X11, you see SIA, Quark, Qubit, Crypto Night, X11 Ghost. These are all different cryptocurrency algorithms. So if your system is tailored to a specific one, you're going to be limited to trading just those.
Right, yeah. So if you're like, hey, I want to mine Bitcoin, I'm bullish on Bitcoin, I don't care about the electrical costs, I just want to build my position through mining, then you don't want to buy a Bicol, BKB, one of their machines that ran LBRY. It would not be able to mine Bitcoin. So yeah, they're specific. And then on the more versatile end, you have GPU rigs. And I may have sent you a few pictures of those. These are more homemade looking contraptions that are literally using GPU graphics processing units from like desktop computers, and you'll cram, up to 8 of these GPUs onto a frame, and then there's one CPU and one, maybe one, sometimes 2 power supplies. And now with this, and that is a GPU rig. And so you plug in power and Ethernet, and now with that you can mine dozens or hundreds of different algorithms. So I can't even keep track of all the different new algorithms that a GPU rig could mine.
Yeah, I've got a couple pictures up here. These are some of the ones he's built, and you guys can tell the difference. So these are obviously pretty high-end graphics cards. You see all these little black boxes here. He's got 1, 2, 3, 4, 5, 6 on this metal rig here, and then it looks like another 6 on the other. So this person's got 12 pretty high-end GPUs. These are graphics processing units which have less hashing power, meaning they're not as powerful as an ASIC, but they offer a lot more flexibility. So if you're somebody who wants to be jumping around to a whole bunch of different cryptos, probably better with the GPU. Here's another one, which is, you can see the graphics cards here as well. And as he mentioned, the costs, right? Obviously, these things are not cheap. Good luck getting some of them right now. They're very difficult to get. But you do have to have some infrastructure and kind of building your computer out. One thing where I think that Ryan is going to be doing a really good job at is tailoring these things, because it's not just, hey, I buy some video cards and I slap them all together and I turn it on and it runs. You have to fine-tune this thing. It's like having a mechanic for it, because there's so many different variables to make it faster and more efficient. Am I right?
Exactly, yeah. And like that picture you just pulled up, that was a client of mine. He had like a small mining operation. Actually, he was running out of his business, a warehouse in Culver City, and and so I was troubleshooting that miner and getting it to run, because the other thing to consider is the uptime. So unlike just turning on a fan, that as long as the fan has power, it's going to keep running, a GPU rig especially will go offline and stop hashing for any number of reasons. And so whether you had it overclocked too much, or it's a temperature issue, because again, these are consuming a lot of power, and so that electricity, law of thermodynamics has to go somewhere, so it's converted into heat. And so some people will think, okay, here's a stuffy room, I'll put these mining machines in and not have enough ventilation, and the temperatures will just get way too high. And so yeah, your uptime is something you have to monitor also. And then there's a number of tools, software and otherwise, that can help the, I guess you could say, mining operator keep the uptime as high as possible.
Yeah. Cool. I'm just staring at the system over here to making sense of it all. It's pretty cool. One of the things that Brendan said, rigs often need heat sinks too. This is one of the major considerations I think people overlook. I'm here in Southern California, and fortunately I have AC that goes right to the room where I was going to be building my mining rig. And I just, you add in that extra variable of, now I need to think about air conditioning costs. So it's not just the electricity just to run the mining rig and the computer, it's the internet, it's all the infrastructure. And again, those graphics cards can be very expensive. If you go with an ASIC miner, again, if you can find them, because they're being gobbled up by major corporations, No, those things are expensive. The numbers I ran for me, I'm trying to remember off the top of my head. After I bought an ASIC miner and calculating all my electricity and internet, and not even including your AC, it would have taken me something like 2.5 years just to recoup my cost of the hardware. And I went, I'm just going to go buy Bitcoin, and I'm glad that I did at that one point. Now, I'm going to show the other one here. Walk us through, I think this is a very interesting change to what most people are thinking, because you mentioned excess energy here. This is a system that you built, which Brendan was talking about people hooking them up to Game Boys and to Teslas and driving around with a mining rig. This may not look like much, guys, but this is actually a very interesting concept talking about excess energy. Walk us through your solar rig here.
Okay, yeah. So back in 2017, I started to realize that you've got to have low electrical costs to make sense with mining. So I started to experiment with solar and started to teach it to myself and learn it off-grid and on-grid. And so, this picture you pull up. So that is above that setup is actually 20 solar modules making 5.2 kilowatts, which will make about 30 kilowatt hours a day. And this is actually for a customer of mine, and they're off-grid, so they only use maybe about 10 kilowatt hours a day. So they have 20 kilowatt hours of electricity excess, and they don't have a grid to sell it to. So if you're on grid, you can make an agreement. It's called a net metering agreement with the utility, and they will purchase electricity that you produce in excess of your consumption. Now, even if you do have that utility, they will purchase it at a rate of like 2, 3, 4 cents a kilowatt hour,
Right,
and sell it to your neighbor for 25 cents a kilowatt hour. So it's still not that great of a deal. But so even if you have on-grid solar, it makes sense to monetize your extra power. Let's say from a little bit after sunrise to a little bit before sunset, to run a cryptocurrency miner. So that's exactly what that system is. It's set up on a timer to start, depending on what time of the year, around 8 a.m. and shut off, about 5 p.m. And then that customer is accumulating Bitcoin in that case for a very, very low cost. So that's a kind of interesting way that it makes sense to use mining.
Yeah, and as Tom pointed out here, he says in the Inland Empire, in a desert area, you have tons of sun, you might have excess. Now, I will throw in a different story here as well, which I found very interesting. One of my coworkers, Carter, has a nephew or something that's up in Washington State, in the northern part of it, and it gets cold as hell in the wintertime. And what was interesting is they have a couple of ASIC miners that they're running, and instead of using AC or heating for the house, they're basically just putting fans behind the ASIC miners, the whole mining rig, and blowing that hot air into the house and using it as a heating element. So now this is another variable here, right? I'm in Southern California where I'm not too concerned about freezing. But if you're like Brendan up in the neighbors to the north in Canada out there, where basically you don't get to leave your house because it's snowed in and ice cold, this actually may be a good thing to be generating the heat and utilizing it to offset some of the costs instead of turning on your heating bill. So, different ways to look at it. I think that you have to kind of analyze, is it something that you want to do? Which, personally, if I could get cheap enough electricity and at least make a couple of bucks on it, I would 100% do it, because I want to support the ecosystem. I want to support crypto, the growth and adoption and the security of it. So I would definitely do it, but the cost just doesn't make sense. If you guys have cheap electricity, or like this guy, which I think is just an awesome system, you've basically got a little storage shed sitting outside. It's battery powered and it's operating off that solar. So why not utilize that free electricity rather than sell it back to the unscrupulous power companies for 2 cents a kilowatt hour?
Exactly. And especially with like back in 2018 or so, when I was first doing some of these systems, or even a year ago, Bitcoin was under $5,000, and if you run the numbers there of, let's say you're producing at the time 70 cents a day of Bitcoin, it's like, oh, is that really worth it? Well, that 70 cents, if you kept it, that would be $7 a day. So That's the other thing, is if you're not selling the crypto that you're mining, it has that potential to appreciate.
Question came in here. Let me see. Where is it? Jerry says, SHA-256 code, what is the chance of that getting hacked? Well, if you look at the lotto numbers, picking the Mega Millions, right? The odds of winning that, I believe, are 1 in 256 million. That is, what, 2 with 8 zeros after it. We'll just say that. Your odds of cracking SHA-256 would be a 1 with 30, I believe, 36 zeros after it. So just to give you a little bit of perspective, the winning the lotto, you've got 8 zeros. To crack Bitcoin, it's 36 zeros. So good luck, because none of us here are going to win the lottery. If you do, I'm your best friend. Remember me, please, if you win the lottery. You're not going to crack it yet. All right, cool. So I'm going to keep going down the list here. We had a couple things I want to talk about. Let's say I did decide to set up a mining rig like this nice one you got over here. One of the things I think people need to understand is that the odds of this individual right here that has this, he's got an Asic miner. That little box there looks is an Asic miner. He's specifically mining a type of cryptocurrency, most likely Bitcoin or SHA-256 basis. Will this person succeed in solving a block of data? One block, because remember, right now I believe it's 6.25 Bitcoin. One block of data is going to get you over $300,000 if you solve one block of data, which is solved every 10 minutes. Ryan, does this guy have a chance of solving a block of data by himself?
Very, very, very low chance. There is a chance. But yeah, so that's a good point. So you want to join a pool generally, which means you're pooling your hash rate with whoever else is in that pool. And then you share or your contribution and hash rate is recorded, and each day or hour, depending on the payout method, you're getting a share of the pool's earnings proportional to your contribution. So yeah, you can solo mine. There's people on eBay that'll sell like solo mining contracts. It's kind of it's literally like a lottery thing. Mm-hmm. You have a little better chance if you're doing it with Litecoin or one of the smaller cryptocurrencies. But so yeah, you can solo mine, and the benefit, of course, would be, like you said, if your machine submits the winning nonce, which is what the machine is, which is right now I think it's around 19-digit character. If you solve that block, then you get the entire block reward plus the transaction fees. So, like, I'm looking at bitinfocharts.com. It's a good resource. And right now, the reward per block is 6.25 plus 0.6781 Bitcoin. So, which would be the transaction fees. So, right. But yeah, in general, if you want to have consistent payout each day, then you want to join a pool.
I'm gonna share a picture here just so everyone can see clearly what we're referencing. So bear with me as I change the picture here. So the perils of doing things live. There you go. So. Remember we showed you that one where you had the one little individual miner, and I will show it again here. There is the one little individual miner, right? Come on, Merlin. Jeez Louise. There you go. So this is one ASIC miner. That looks like one of the smaller ones, right?
I'm not seeing the picture yet.
It's the solar one? It's the only one that was an Antminer? Or ASIC miner?
Oh, okay. Yeah, the S9.
Yeah. There you go. So that's the S9. Great. By yourself, guys, this is actually a pretty powerful unit. But remember, you are competing against people who have rigs that look like this. And this is one of the largest mining companies in Russia. I mean, literally, this is a freaking Costco warehouse full of mining rigs. So, your odds in competing directly against them to solve one block is just not good. It's probably not going to happen. If you do, great. But it's probably best if you do this to go to a mining pool, which again, if you've got 10 people, and let's say you got 10 people in this pool, I'm just using as a basic example, you got 10 people in there, and everybody has the same hashing power. They all have one Antminer S9. If they solve a block of data, then basically everybody gets 1/10 of that pie. And that's pretty much how it works. So if someone has twice as much hashing power, then they would get a proportionally larger percentage of the reward of Bitcoin. So that's probably the best way to do it. You're not going to get a full 6.25 Bitcoin reward, but you might get a small piece of that action and get it much more frequently. I think one that I was looking at earlier is Slush Pool, which is one of the major ones out there. They've already mined over 1 million Bitcoin. So, get a little piece of that action. It's pretty awesome.
That's right. Yeah.
All right. Now, what else have we got? What else are we going to cover? We talked about the mining pools. So ultimately, when it breaks it down to it, you've got 3 major costs. You've got your electricity, which is the biggest variable. You've got the actual equipment, which is going to be an Asic miner or a GPU. I would say you probably want to hire somebody to come and tailor it for whatever cryptocurrency you look at mining. You also have the consideration of doing it individually or going into a pool. And then also one that I find unique is the ability to be using different platforms. There's a lot of them out there on the web where if you have let's say a GPU miner, you can bounce from one cryptocurrency to the other, and they'll tell you which one is paying the best rewards right now or has the best chance of you getting a block of data, right?
Exactly, yeah.
Cool. All right, so the bottom line. You said at the very beginning, should somebody set up a mining rig and become a crypto miner?
For most people, no. But yeah, if you you have solar, you happen to live by a river and you built your own hydro power station, you live in a cold environment, or you want to do it as a hobby and something it's addicting, it's fun, you learn a ton about computers, and you're not putting a huge investment in it, then yeah, it's awesome and go for it. Just keep in mind that you're not going to get rich from it on a small scale as residential mining as a hobby, but for those few use cases, it's a pretty awesome thing.
All right. Well, that's kind of wrapping up the mining issue. What are your? We haven't gone over any of these questions, but just kind of get your take on where we're at with regards to the crypto. Are there any hot trends or interesting things that you see coming to market with regards to maybe mining or crypto in general?
Yeah, good question. One thing that's kind of been interesting is in the past bull runs. The supply of ASICs there's a few manufacturers, Silicon, Bitmain, Baikel, mostly overseas, and they've been able to match demand with supply by making a ton of new machines. So the market would get flooded with them during bull runs. But I guess complications in 2020. And then one of the main chip foundries, which would be, was it TW? I'm getting the acronym wrong, but Taiwan Semiconductor Manufacturer. They haven't been able to supply, from my understanding, enough chips. So what you've seen is miners that you could buy for, like an S9, you could buy for $100 on eBay, March of 2020, a year ago. They're selling for 500, 600, 700. So an interesting thing is basically this kind of shortage of ASIC machines and the potential to arbitrage or trade them by selling on eBay if you already had some and you had ordered them in advance. But so that's something interesting. And then just keep an eye on if the manufacturers will release any new generations. So right now, SHA-256 miners are on, I believe it's 7 nanometer chips, and that's the nanometer as in a billionth of a meter, and that is the diameter of the transistors on these chips. Mm-hmm. And there's like 2 machines in the world that can make these chips, and so the smaller they get, the more powerful, the more dense that chip will be, the higher the computing power it will have. So keep an eye out if you see, Bitmain or someone release 5 nanometer chip, or I think it usually goes in odd numbers, but
It's kind of like Moore's law, right? Like everything gets it gets half as much and twice as fast every 18 months. It seems like that's the case with the Asics. I mean, it seems like it's just getting faster and faster and faster.
Exactly. Yeah, it's following Moore's law. Yeah, but at a certain point, it comes down to like Newtonian physics stops working below 3 or 5 nanometers. So we might be hitting a limit. Kind of interesting, and then it gets into quantum mechanics on. Yeah, so that'll be interesting to see who makes the next chip and when that kind of gets maxed out. Basically, the computing power, the computing density for SHA-256 will actually, it's approaching an asymptote that it won't surpass as far as I understand. So that's pretty interesting to watch to see what happens with that.
I'll definitely keep an eye on it. Guys, Ryan Hall has been our guest today. As you see on the screen, I've got his email up there, cryptoworldconsulting@gmail.com. If you do want to get a system put in, whether it's solar, he does solar installations as well. kind of a perfect symbiotic relationship, solar and also doing mining. But I put his email up there if you had questions or want to get a system put in. He's been doing it for quite some time, and as you can tell, a lot of great information. So Ryan, thank you so much for coming on. I know it was been a while, a long time in the coming, but I'm glad you came on today. Appreciate it.
Yeah, I really enjoyed it. Thank you so much, Merlin. And really appreciate it.
Cool. We'll get you. I think we'll probably do some more crypto shows with you because you and I both share the zest for crypto. So we'll probably do just a regular crypto show down the road with you.
Awesome. Yeah, I love talking about it.
Cool. All right, man. Well, thank you so much. Appreciate sharing your knowledge. Take care, man.
Okay. Take care.
Oh, you guys enjoyed that one. Ryan Hall, interesting character, knows a lot of stuff about cryptos, knows stuff about mining, and it's funny because in talking with him, we spent a good, hour on the phone the other day as I was walking around the dog park. When I first did the analysis of it, I felt like it was one of those things that for me just didn't make monetary sense. And as I can see, you got Don Fron in here who's saying, hey, I'm doing it. I bought all the equipment. Great. I think it's awesome. At a certain point, you got to look at the cost and say, am I, as Brennan would say here, is it worthwhile to get all the equipment and mine, or is it cheaper just to buy the Bitcoin? And for me, when I did the analysis, and this was, of course, 2017, the analysis for me was it was better to just outright buy the Bitcoin. Now, again, those variables are going to be different. I mean, there are some countries, actually, one thing that Ryan mentioned was very interesting is you could, if you're really into this, you could have all the equipment, and instead of paying for electricity, which is your highest expense, there's a lot of places right now that are just looking for tenants, right? They're looking for tenants, and you could go in there and say, hey, I want the electricity to be included in my rent. Okay, great. Yeah, we'll do that. But you tell them, hey, I'm going to use a lot of electricity. I do a lot of computer stuff. They'll probably kick you out eventually. But you might get, 6, 8 months, a year of free electricity. Now, all of a sudden, you've taken the most expensive variable, other than maybe the startup costs and equipment, and removed it from the equation. That, to me, makes it much more beneficial. But, of course, if I was a landlord and I'm looking at the utility bill going, how the hell is every unit using like $5 worth of electricity a month and this guy's using like 800? That would be a problem for me. But that's one way you could go about it. Check your electricity rates, make sure that it's going to work for you. There are also maybe different times of the day when your utility or your power is much cheaper. And of course, as it's here, it's tiered, so it gets really expensive here in Southern California. But as I mentioned, I believe it was like somewhere up in Washington State was like 7 cents a kilowatt hour. That number actually worked for my calculations and would have been making me a good monthly income off of this. However, part of the issue is also, as Ryan just pointed out, you buy this ASIC miner, you can spend thousands of dollars on one, and in another 18 months, there's a new version that's going to be much faster and cheaper. So you have to kind of keep upgrading your system, or you just become a laggard out there. Now, the other side of it is, which Brendan was talking about earlier, is there is companies out there that's all they're doing. There's publicly traded mining companies that you could buy into, and you're not exactly getting a reward of the Bitcoin. You're going to be, obviously, the anticipation of share price appreciation. So you're not actually physically getting Bitcoin, but it could be that you are part of that, the ecosystem, if you will, of the mining space, and supporting that through buying a publicly traded company. That's another way that you could do that. There are certainly some decent deals out there. Let's see what else. Merlin, didn't you once say there's no future in mining? I don't have said there was no future in mining. What I said was, the future of mining to me is going to be getting more limited because, look, I don't think Bitcoin will ever change from SHA-256. Maybe go to SHA-512, right? Once somebody cracks SHA-256, which should come with quantum computing, they will probably just double the algorithm and call it a day. But they will always be a proof of work type of system. And the proof of work cryptos are the ones that need miners. Proof of stake does not need miners. You need validators, right? And I told you, I'm staking right now Polkadot, and I'm going to be staking some other ones here, and I will get paid for that. That doesn't require all this intensive computing power at all. It just requires you to deposit your cryptocurrencies into an account, and you are now, quote unquote, staking it. So you're seeing like Ethereum. Ethereum is right now proof of work. They're switching to proof of stake and should be completely over to proof of stake here in the near future. What does that do to people who are mining Ethereum? They've now got all this equipment. They got to go, okay, where am I now going to direct all of my hashing power? My hashing power is what it takes to mine these cryptocurrencies. What they'll do is they'll probably jump into, let's say, maybe a Bitcoin or some other cryptocurrency that has a similar algorithm. And next thing you know, those ones become harder to mine. So it's just basically they're following the money. And once more companies are going to proof of stake, which is much less resource intensive, I think it starts to squish out a few of the miners or the mining potential here going forward. Awesome, Brian. You did it. Brendan did the great thing. I was just thinking I was going to read off two of them, but he's got a few more there. He says mining stocks, Mara, Riot, ARBKF, BTBT, DMGGF, and I think what's it called? Magic MGIC, MGIK is another one. It was the one that was backed by that crazy guy that started the antivirus program, McAfee. John McAfee was back in, I think it was MCIAS or something like that. All right, what other questions have I looked into Uniswap, Merlin? Any thoughts on it? I have looked into it. I'm still fairly skeptical on that, but I will I need to send money into it and really start doing it before I give my opinion on it, so I'll have to hold off on that one. Let's see. There's a reason why Bitcoin mining has gone from basement CPU to massive rig farms. Yeah. All right. And I think it's great. Just a reason to leave California. Don't even think about it, buddy. It is so nice and warm today. See, you have this cold stuff. It's called snow. I don't get that here. I can go to the beach. I can go to the mountains. I'm not leaving Cali, buddy. Come visit anytime you like, though. All right. Let's see. It sounds like a neat hobby, but an expensive one. Very expensive. Purchase Bitcoin. Enjoy future growth. I agree, Richard. For me personally, that's the route that I would go. But I'll tell you what. I really wish that I could support the ecosystem. So I run a full Bitcoin node out of my house. Now that is not a mining rig. That is just me supporting the network of Bitcoin. So you have a couple different things. You have a node, which is I literally have a copy of the entire blockchain of Bitcoin sitting arm's reach from me right now. And I am a part of this entire system, which is a good question because somebody earlier said, well, what happens if they shut it down? You're not going to shut it down. Even if there's no, it wasn't if they shut down. What if the grid goes out? Well, take a peek at this graphic. Let me set it up to you. Hopefully you guys see this chart here. What this is showing you right now is how many nodes there are. 9,735 nodes around the U.S. It's dropped a little bit. There used to be over 11,000. But bottom line is if there is an EMP that blows out every single friggin' circuit board in the United States of America, every one. Look at this big old piece over here in Europe. Europe is booming with regards to nodes for Bitcoin. But you've also got some down here in New Zealand. You got them in Australia. You got them in Indonesia, Thailand, Vietnam. Russia's got a bunch of them. South America. All these little dots are nodes that are running Bitcoin. You'll see 1,800 of them in the U.S., which is 19%. Germany's got 18%. But, I mean, there's 96 other countries out here that all have a node. They'd have to go and literally shut down every single one of these to kill Bitcoin. And then the thing is, as soon as the power comes back on, the network is still there. It's still there. It's still going to be functioning. So they're not going to shut it down. As I mentioned the other day, I think what they could be doing is putting, criminal fines or criminal actions on companies if they transact in Bitcoin. And that could create some problems, but I don't think they'll go there. You see what's happening tomorrow, by the way. There was an email that came through today from Tomasino, which is a great one. You guys may have seen that tomorrow is National Burrito Day. And let's see, let me go 1 second. I'm going to try to bring it up here so you guys can see. Bitcoin for burritos. They're giving away Bitcoin tomorrow. I would encourage you guys to check this out. I will certainly be, let me see, where is it? Chipotle Newsroom. Think about doing this stuff live. There you go. You go to bitcoinorburritos.com and you will see this page right here. I'll share that with you guys. There you go. Tomorrow they're actually going to be giving away Bitcoin, and it's brilliant. I think that this is absolutely brilliant. So basically what happened was an individual lost a lot of Bitcoin. Of course, that's a normal story, but an individual lost a ton of money. I think let's see. National Burrito Day, Chipotle and Stephen Thomas, the founder and CEO of Coil, will launch a new interactive game called Burritos for Bitcoin. It's a playful ode to Thomas's experience. So Stephen Thomas basically had a little device, a little hard drive like this one, that was encrypted, and he forgot his private key to access it. And he had something like $387 million worth of Bitcoin sitting on it. So the game for tomorrow that Chipotle will be doing is you have 10 guesses to guess a code, I believe. I don't know. I'm kind of anxiously waiting for it because I want to win some Bitcoin. They're giving away $100,000 worth it. I'm great. Wait, what did I say? A weak and dumb argument? What did I say? If the grid goes down, there are bigger worries than accessing your digital assets. Yeah, exactly right. If the global grid goes down, well, we're screwed. But it's sitting on a hard drive somewhere, so unless it fries every computer in the world, it would run back up. Yes, Jerry says there's a London fellow who lost 250 million. Yeah, I think it's actually even more now. It's probably close to 300 million. The one in the garbage dump. Bottom line is there's a ton of these out there. It was funny. I was sitting with a colleague today looking up the richest Bitcoin addresses, which take any guesses. What do you think the richest Bitcoin address, if you can literally look at the address and see how much it holds, don't Google it, just curious, what's the dollar amount of the richest single Bitcoin address out there? You guys got any guesses? I think it'll be a fun one. I'm going to let you type it in here as I bring it up and share that with you because it's pretty amazing. And you look at these numbers and you just go, you got to be kidding me. Why don't I have this one address? What are your guesses? Private key is only 6 digits? No. The private key is a huge string of characters. So I don't know what it was for his specific. It's called the Ironclad or Iron Wallet or something. Big Eb says 11 billion. Medic Man Down says 1 trillion. Well, it's not that much. But it's crazy thinking that in one address, one location, you can see right here, you've got, these are clearly exchanges. Binance, and then you have Huobi. Binance right now has an $8 billion wallet, 8.4 billion. Huobi's got an 8.3. There's somebody sitting right here with 5.8 billion. I mean, what's crazy is you can look at this address. You can just stare at this address and you can see the value of that account, right? You can see how it's been growing. You can see the number of Bitcoins being put in, how often they move Bitcoins in or out. Like, this is a pretty active address. There was one that I thought was very interesting. I think it's down here somewhere. I could have sworn I picked the right one. No? I thought it was this guy. Yeah. You guys see this address right here. Oops. This address basically bought Bitcoin back in 2019 and hasn't added to it or done anything to it. It bought $1 billion worth of Bitcoin in 2019, and now it's worth $5.6 billion. Yeah, sorry, Don. I didn't. You're on the next page. So I go to last page. I can scroll down and just hit last. You've got 1 Satoshi in your account. Sorry, John. I couldn't resist. All right. Let's see. Stop looking at us. Yeah, wouldn't it be? And just to hack that one, this should tell you right away that it's impossible to hack because you're looking at the addresses. If you could simply get in there and take those address and look and access that, they would be gone. But you can't. You're not gonna be able to hack it. What was that address? This was BitInfo Charts. I basically just type in richest Bitcoin address in Google, and it was the first one that came up there. All right, let me see. I'm running out of time here. Let's see. Was there one question that came in? Let me go through some economic announcements. Tomorrow, obviously, is not our Friday show. I will still be doing a Friday show, even though things will be shut down. Tomorrow, let's see. Tomorrow's the Bitcoin for burritos. I want to make sure I got to that one for you guys. Guests, I guess we could talk about guests for tomorrow. Tomorrow, I'm going to have Justin Krebs on the program. We're talking long-term investing. So big picture stuff with Justin Krebs tomorrow. Kind of a big switch from the show we had today. So let me go to your economic calendar just to show you what's happening for mañana and some of the stuff that happened today. I thought this was rather interesting with pending home sales. Remember, we had the new home sales were off the charts. It was looking great. It was over 11% gains. Here is your pending home sales, big contraction out there. That I was kind of surprised by that. You had the expectation was for it to drop from negative 2.4 to negative 3.1. Came out at negative 10.6% for pending home sales. Definitely a pretty significant miss there and much worse than expected. So that one was a bit nerve-wracking. For those that are still trading the Australian dollar this evening, you do have retail sales numbers and trade balance numbers coming out. Also retail sales numbers coming out for the Swiss franc and for the euro. Now for tomorrow, it's pretty much a big block of manufacturing numbers. You see you've got manufacturing PMI numbers for pretty much every country in the European Union. You also have the British pound. You also have the US coming out and Canada. So let's just call it manufacturing. What's tomorrow? Thursday? Manufacturing Thursday, as almost everybody's doing manufacturing data tomorrow. For the US, down at the bottom, you've got construction spending as well. And then I put in the red box the OPEC JMMC meetings. I think that could potentially create some waves. Here in the U.S., I haven't seen too big of a spike up because of the tanker jamming or now unjamming in the Suez Canal. But clearly that had, a 4, 5, 6 day impact on oil supply. Most of that oil is headed towards the European Union, so they'll probably experience a higher jump in prices. But we'll see what the thoughts are from OPEC going forward about increasing production to make up for that jam demand. Who knows what they're going to do, but that could be a pretty important one for tomorrow. Okay. I don't know, Brendan. I haven't reached out to Greg. Get him on. I'm busy. I haven't had a chance to contact everybody. Cool. Bobby says, "What is storage?" It's a different type of cryptocurrency. I won't go into all the details on it. I have like 8 different cryptocurrencies people want me to break down, so I might do that. We'll see if I can get that on Friday's show because I have a whole bunch of other questions. But I'll put that on the list of cryptos, just so I can add it in. And mind you, Coinbase and Kraken, these guys are going to be putting out as broadening their diversification of holdings with regards to crypto as quickly as they can. Because right now it's a battle for dominance in that space for a crypto exchange that's domestic US based. So it'll be Kraken, it's going to be Coinbase. Hopefully we'll get Backed to come online here and all of a sudden be a big player in it because I am invested in Backed. Cool. All right, that's going to do it for me for today. If you enjoyed today's show, you enjoyed Ryan Hall as I did, I encourage you to give me a thumbs up. Maybe click that subscribe button if you're new to the show. If you have any specific questions you want me to ask Justin Krebs tomorrow talking about longer-term investments, do so. Email me at TraderMerlin@gmail.com. That's the easiest way to get your questions on air. Of course, you can also put them down below the YouTube video at any time. And of course, if you're the podcasters, I have to give a shout out to the podcasters. Thank you guys for perpetually dealing with my tardiness on uploading the podcast. That's going to do it for me, for everybody. Hope you enjoyed it. Hope you learned something in the process. Crypto mining is certainly one of the hot topics, but unless you're Don Fran, it probably makes sense just to buy the Bitcoins. I'll see you guys tomorrow. Take care.